Thanks. I hope I don't keep you too long from lunch, and if you do have questions, I'll be available at lunch. I'll try to keep some time for questions at the end of the session because there's quite a bit of information coming your way here. I'm trying not to make it a lecture or an information dump. So I started studying Bitcoin and blockchain in 2013 formally. I was probably one of the first people paid to study this stuff, and it wasn't just for a hobby. I was looking at it in 2012 as a hobby, managed to convince some people to pay me to do it. So I'll start here with the question, why blockchains for insurance? And I hope by the end you'll be able to answer that simple question. So this summer I went back to basics. Someone had hired me to write sort of a 101. And I'm going to share that with you guys so that we can take steps afterwards to understand all the different research that I've uncovered over the past little while. So blockchains are not built from a new technology whatsoever. They are a new orchestration of technology. It's kind of like the bicycle. They had all these things, and then all of a sudden the bicycle was put together, and it was like, wow, it works. And you can't take that idea away. The idea and the orchestration itself is what's important. So we'll go through them very quickly. The private key cryptography part. This has to do with push transactions. So it's much like cash versus plastic. So when you pay with plastic, you have to share quite a bit of information about yourself in order for someone to go in that pocket of yours and take the money out. It's not exactly like cash. Cash is much simple. You put it on the table, you walk away, it's done. That's the push transaction aspect. That's a very important thing. It might seem simple, but if we look at the exposure we all have, we've heard it a few times today, we haven't connected our entire lives to the internet. And if you're a criminal, you're banking on that right now. I mean, that's where crime is. It is cybercrime. If you want to hurt children, if you want to steal from somebody, if you want to defraud somebody, you do it in the digital world. No one's going to banks and holding them up anymore unless they have absolutely zero imagination. You can get all the same results, and you don't even have to get out of bed. You know, there's no more police chase and all the rest of that. So because it's a push transaction, it has implications for identity. You don't have to share as much, and you get the same results. The mythical creator of Bitcoin put that right at the beginning of his essay that launched Bitcoin. Banks, insurance companies need to be wary of their customers because they must ask them for so much information. It creates this kind of adversarial relationship sometimes, and they're in charge of all this information afterwards. They have to secure it, and they spend tons of money securing it. The second one is a P2P network. So the internet, you know, the guys who created Napster were the first people to realize the World Wide Web is not the only part of the internet. They said we can do a lot more with the internet than just the World Wide Web. The World Wide Web is just one corner. P2P networks began with Napster, and if anyone's torrented and ask anyone in the media business, they'll tell you all about the power of a P2P network. So the tree falls in the forest thought experiment, I think, is very helpful to understand the dexterity and the power of that part of the technology. If a tree falls in the forest and 1 million computers with cameras on their heads record it falling, we can be pretty sure it fell. There's no more debate about it. We don't have to trust one person any longer to say, oh yeah, trust me, the tree fell. You've got independent computers here. And I'll skip right away over to this program one. How do you get 1 million computers in the forest looking to see if a tree fell? That's one of the neat things that Bitcoin did. It incentivized people's selfishness. That's the tragedy of the commons argument. Tragedy of the commons, you know, when in colonial America, let's say, you'd have this piece of grass where you'd come to the marketplace and you'd leave your sheep or your cow and all the rest of it and they would eat it up. But what if someone didn't want to eat their own grass and they just let their cow eat all the grass? I mean, this is the beginning of economics. It's sort of the original question of economics. How do you incentivize people's selfishness to actually contribute to the greater good? That's how you get the 1 million computers in the forest looking to see if the tree fell. In the case of Bitcoin, there's a kind of lottery. You attach your computer to the network, and one computer, everyone is processing the transactions, everyone is doing it. Every single computer is recording that tree falling in the forest. One of them, as a lottery, will get paid. That's what Bitcoin mining is. Now, Bitcoin in 7 years has consolidated, attracted more computing power than the 10,000 largest banks in the world combined. 7 times more than Google. Now, it's not faster than all of them. It's only as fast as its slowest node. But nevertheless, this is a very secure network in that sense. Bitcoin has no employees, no one working for it, and it has never been hacked. Not once in its history has it been hacked. Exchanges, other things have been hacked. These are separate problems. Bitcoin itself, spending $0 on security, has never, ever been hacked. These three aspects of the technology give it three qualities that are different for the digital era. Identity, system of record. You've heard it say database. Database and system of record are not the same thing, in my opinion. System of record is much richer. It's data with a history of itself, every step in time. Databases, we think of them as a snapshot, as accurate for this moment. Information is updated. In the case of a system of record, you have the entire history of the data. Now the last one, the program. Bitcoin is the program running on the Bitcoin blockchain. It's the protocol. It's a very simple protocol, no double spending, no double spending. This is what people are experimenting with today. New protocols, new rules that determine what information is put into the record, into the system of record. The authentication and authorization rules. Can you do what you're trying to do? And that's the platform part. When people talk about smart contracting, what they're talking about is the type of program you put at the end of your P2P network, which is interfaced with private keys, with push transactions. So in a nutshell, it's push transactions. You use the private and public keys to interface with it. There is a P2P network and a system of record, and the program is determining what the rules are for putting information into that system of record. So in a nutshell, that's what it is. Now, in my job before this, I was working for a parliamentary committee in Canada, and what I would normally do is take about a year to study a subject in depth. So the future of the air industry in Canada, how we're going to use spectrum in the future of broadcasting for those reasons, the financial meltdown, terrorism financing. So I would take a look at one industry and do my best to become an expert in it. I was recently hired from a Manhattan company to do one on insurance. So I had to do my best to learn about your industry. What I found out is that it's a dead simple business. It's not that complicated. It's, whoops. Dead simple, dead simple. Well, that was the promise to pay bond of trust. I don't know how to get this back on. Oh, there we go. The promise to pay bond of trust, right? These are the relationships that go around a typical customer. These are the different units within an insurance company. Of course, I'm simplifying it here, but that's what we're talking about. The disclosure of accurate data, claims management, safety, capital, and payments. Now, I'm going to take you through what the startups are doing, what the large incumbents are doing in each of these aspects. So, to begin with, we've got the disclosure of accurate data. So, part of the job that I've done over these years, and this is sort of a turning on itself, convincing people that something digital was actually property, that an ephemeral ones and zeros thing was actually property. Bitcoin was property, a digital asset. But that has now come full circle. People are using that unique digital code, the uncopyable code, to link physical items to a digital network so that you can't hide what a thing is. Now, let's think of diamonds, for example, luxury items, the blind spot of the insurance industry. I talked to a lawyer in Toronto, and she told me that that's all they do is high-value insurance. There is no way to catch diamond thieves. I mean, insurance fraud thieves, pardon me. You pay your premium, your diamond is reported stolen, and an insurance company doesn't really have a way to determine if the diamond that was stolen, which they now own, once they pay the claim, the diamond insurer owns that diamond. There is no way for them to determine, other than a paper certificate, which can be forged, whether the diamond in the pawn shop down the road from the person who made the claim is really the diamond they now own. If you do this, if you get a fingerprint, every diamond is unique, a 40-point fingerprint, and you put that fingerprint into they use the Bitcoin public ledger. There's nothing special about it. They go right to Bitcoin. They anchor it into the database, the system of record part. So now you can link the diamond to the public record. And when you want to find your diamond, if you believe that the diamond in the pawn shop down the road from the person you think might have stolen it, you can actually verify that in an instant. And that's the business model of a company in London. Now, diamonds are a self-regulated industry, so that's why they went there first. The diamond industry is very keen on getting the synthetic ones out. That's also a part of the insurance fraud. So they're going on that avenue, and they charge insurance companies right now. Insurance companies that want to insure high-value diamonds, simply upload this fingerprint into the Bitcoin blockchain, and now they have a reference point. Now the digital item has a real anchor in the Bitcoin blockchain, and they know it can't be changed. You have to lie to all those trees in the forest. So that's the system of record being applied. Now, title insurance is much the same. We see that in art. We're talking about specialist art appraisers that are trying to determine if a painting is authentic or not. The largest insurance appraiser, art dealer, insurance appraiser in Manhattan is out of business. They sold $80 million worth of forgeries, and they didn't know. You know, you have to pay a highly specialized person in order to get these things appraised, and there's a problem with that. You can fake it. The sharing economy, here again, this is that sort of I'm a car, I'm a taxi, I'm a car, I'm a taxi. This is difficult for human beings to do with paper, to change the quality and the character of the thing being insured, right? That would be very difficult to call up an insurer every time. And that's why we haven't seen uses of commercial property, or sorry, private property being used for commercial purposes. That is not so common right now. And that was really an obstacle for the insurance industry, to be able to oscillate, to change between commercial and private property because of the time issues. There is, of course, a dispute resolution problem there. What if you didn't say you were a taxi at that time? How can we trust it? So there's a sort of timestamp aspect to the database. We know when. There isn't a dispute any longer. We know when it was a taxi and when it was a car. There's a company in London doing that for people's homes that they're renting out for workspace. So, you know, you go to work every day, but you've left your home open. Other people might want to use that as an office, so they rent it out. They brought this data point. It's just a data point. When you're an office, when you're an apartment. They brought the data point to Lloyd's. It's just being uploaded onto Bitcoin's blockchain again. Lloyd's understood the data point very easily. They said, okay, I can trust that. And they underwrote these policies. Very simply, they said, okay, we get that. We understand that this data point is reliable. Here you go. The other one here is quite theoretical, but it's interesting. I'll go over it a little bit. They're called prediction markets. The goal of them in the insurance business is to actually take away actuarial sciences. What they say is that if you put gambling, if you gamble on the likelihood of an event, and you gather enough people, let's say millions of people, that's why it's still hypothetical. No one has gathered these millions of people yet. But they're building the markets to do it. They'll bet on the likelihood of an event one way or the other. A flood, a hurricane, a fire, a terrorism attack on a sports event, et cetera, et cetera. And you'll actually be able to create a pool of money that way. And it's thought that the wisdom of the crowd might be more accurate than actuarial sciences because it will root out liars. The people who have a record of knowing what's happening or guessing right or gambling right, they will be awarded. They won't hide they won't be, information asymmetry will no longer be the name of the game in that aspect. Right now, when we do look at actuarial sciences, you're trying to get your actuaries to price risk more accurately than others, and it's competitive. In this case, but you don't know. There is no way really of determining other than your company's doing well. In this case, in theory, you'll be able to gather these markets. Theoretical, but nevertheless, it's happening. Claims management. This one is dead simple. This is the sort of client-centric claims management part. If you look again at this bond of trust, you've got a claim. You're sitting there saying, where is it being processed? Where is it in the workflow? It's nothing more complicated than that. You'll just have the ability to check what's going on much simpler because we're talking about multiple write-in database. You'll know, just like in Wikipedia, you'll be getting the up-to-date version as it's going because many parties are writing into the database. You're not relying on one entity in the bond of trust to enter their update. You'll just, and then communicate it to you because they're holding this information privately. You'll see it in a sort of public sense where things have been processed. So lots of companies doing this. Really, the argument that they have is that, you know, we digitized a lot of the workflows in the insurance industry for claims management, but it really looks the same. If you would write it out, it's the same as when everything was paper-based. It's just going a little faster, right? That's not digital to its core. We heard earlier about Amazon and some of these ideas about what's the difference between Sears, a big department store, and Amazon. Well, Sears has email and Sears has a web page and they have a Facebook page, but their backbone, their core is not digital. The main workflows in their business are still brick and mortar, paper. They're not digital right to their backbone. eBay and Amazon, like we heard, these are technology companies that happen to be interested in, etc., insurance, whatnot. That's what we're seeing. These companies that are really just learning how to process paper, process workflows, and yeah, we can do insurance too because it fits in our model. Security. This one to me is an opportunity. I found no startups doing this. We know that with cyber insurance as a product, it's growing. But right now, all they're really offering is indemnity for what you lost in business slowing down. Reputationally, you're not being helped. There is no insurance that can help the reputation of Visa or Home Depot or Swift. We saw this $80 million fraud that the Swift network had for commodities trading. This is a blemish on the brand name itself when this stuff happens. So will there be a product one day? I'm not sure. I think there might be. We see sprinklers here in our buildings. This is insurance pushing consumer habits to change. We've seen that with all throughout the industry. Insurance rewards you for being safer. There's a savings in your premium because insurance understands risk, they understand what's safe, and they sort of force you to buy this stuff, whether it's forced by law or not. I do believe this is an opportunity. I haven't seen one product out there, but I do think that when cyber insurance becomes a more important product for these companies like Sony that are really getting hammered when this stuff happens, I do believe that insurance companies will start to understand the advantages of using a push transaction, holding less data, and reward companies for that. So I think there is a potential for uptake of blockchain technology because of that reason. The push transaction allows you to store less information and still do the very simple promise to pay bond of trust that you're trying to establish. Capital. Go right back to the beginning of where the insurance industry started with Lloyd's and that little coffee shop. And all they wanted was a data point, and they had the money. They wanted to know the ship sank, the ship got into port, and they pooled their money and were there to provide this security. I mean, that's where everyone here, the birthplace of this industry in its modern sense came from. There are companies working on creating the same kind of pool. I think it's something like 30 pounds, 15 kilograms of documents are shepherded around the Lloyd's market per important policy. Now, that's a lot of paper just being pulled around, and everyone has to get their copy, right? Underwriters, claims managers, the policy holders, the people selling the policy. I mean, this becomes just an unbelievable tangle of papers, and who knows which ones are the official ones now? Who knows if everyone's on the same document? So these guys have created a simple platform where every time there's an amendment to the contract, everyone can see it. If they don't agree to the amended contract, whatever the document may be, it is not the official one any longer, or doesn't become the official one. People can join together and everyone will know digitally. There is no more paper document in this world. The official documents are paper, and there is security against their counterfeiting, against their amendment, against whether or not they're fraudulently compiled. So at least we'll know now if the document has been updated or not. So it's kind of a back to the future argument. A lot of people believe that the Lloyd's model can now be extended throughout the world. One of the problems we've seen with Lloyd's is that you still have to be within the mile radius of the city in London in order to get into that market. I mean, it's membership-based, it's got its real British, habits, and it's a bit stuck up, and it's a kind of community, right? And that's not really working for them to go out through the world. They've tried to modernize several times. It's not working. So why not just create a digital version of Lloyd's? And that's already happening. There are several startups out there who have built this platform and model in order to share documents and streamline that. Because at the end of the day, underwriters just want the data point. They just want to know what their risk is. Once they see it, if they can trust it, they have the money. And I've been told over the time that I've been researching this, insurance is a very soft market right now. Interest rates being where they are, there's money out there. It's looking to be put to use, and that's what has a lot of these people very keen, that they can just deliver a data point. Different than banking. Banking is going to involve lots of regulators, lots of different parties, you know, trade finance, shippers, merchants, all these other people. And this, take the product to the underwriter, and it could have devastating effects on the industry if you're able to, the incumbent industry, if you're able to provide this kind of data point to the underwriters. The money is there. Payments. Now, the IoT, we've heard a lot on the IoT. The IoT, I'm convinced, will not work. It will simply not work using the World Wide Web or SSL, the secure data layer transactions. It's too much. The liability of an account for the identity of the machine is too complicated. You get in, you get all the machines. That's not going to work. Every machine is going to have its own legal character, its own legal responsibility. Of course, you're not going to put machines in jail. That's not going to happen, but at least we'll know which machine individually, as an individual unit, will be hacked, right? We have to know which one has been compromised. It shouldn't be more complicated than a vending machine is out there that's selling us Coca-Cola, right? You put your money in, you get your Coke. You don't have to log in. The machine doesn't have to have a login. All this stuff is superfluous. It would be too much over-engineered to do what it's got to do. It needs to transmit data. We need to accept that data. It needs to be able to affect payments, or it needs to be able to receive payments. It doesn't need to be more complicated than that. And by having each of them as an independent node in a network, you're giving it the capacity to have a legal identity, which I think is a very powerful thing for the network, much more secure. Oracles are a part of that. This we're seeing in binary insurance. Of course, normal insurance products, you know, you've got sort of boilerplate indemnity clauses. It didn't work out the way you thought, you don't get the money, et cetera, et cetera. But let's take two binary cases, travel and life. These are two cases where it's a yes or no situation. So in the case of travel, we've already seen a few products created where, you know, your flight is canceled. We get the information from trusted sources like the airport authorities. They transmit the information as oracles, and payments are processed. Berkshire Hathaway has a product not using blockchain, but using oracles nevertheless to do this. The idea that the telematics will be involved in payments is an appealing one, and it seems like it makes sense, and it's around the corner as far as I'm concerned. So finally, the conclusion here is why blockchains for insurance? In the digital world, there are really two questions that you have to ask. Who are you, and can you do what you're trying to do? Those are the two major obstacles to the digital world. We need to secure digital relationships that answer these two questions. They become the entire focus of digital projects. To answer these two simple questions, we've over-engineered a lot of it. It's too complicated for these two simple questions. What blockchains allow us to do is find new ways to secure digital relationships so that that bond of trust changes. It's flattened in some cases, it's simplified in others, but nevertheless, if you look at it, the customer is in the middle of this benefiting. And to me, I mean, that really is the history of the last 200 years, let's say, of innovation. It's not that Steve Jobs invented the iPhone and all this stuff. It's that everything that was invented is democratized. It's useful. People found use in it. It's not a luxury to have a microchip in your pocket that manipulates satellites in space. That's the sort of physics of the digital revolution. That's the momentum. People have asked me before, is blockchain just efficiency? Well, lots of things are efficient. I don't know. Efficiency is a very relative term. But if it's empowering, if it puts power in people's hands, if it simplifies the cost of trust, if it makes the bond of trust that much more accessible to the average person, that you can buy insurance products for a moment in time, not an annuity, not a year. You know, I need my house insured in a particular way for this time. I need my car insured for this time. All these questions. You're able to put quite a bit of dexterity and power into the hands of the average consumer. And I think that's the flow of this technology, and that's the reason why I'm so keen about it. I find the empowering capabilities for the individual to be incredibly inspirational. And That's why I'm involved in this business. And if you have any questions, I'm happy to answer them. So I think I still have 2 or 3 minutes. I got 2 minutes. So if anyone has a question, I'm happy to answer.
Hello. Yeah. There are a lot of technology companies providing blockchain on the cloud as a service. If everything is still being done at the server end and not at the customer's end, at the customer's device, empowering the customer, the node, in your opinion, is it still a truly distributed ledger technology, or is it?
In
What do you
my
think?
mind, as long as there's not a master copy, as long as many people are holding a version of the truth, and that there is a protocol in place to determine how information, that the authorization part of the digital relationship. If there's a protocol in place that determines the rules by which information is added into each of the individual ledgers, each of those trees in the forest looking to see if it's falling, that's the major difference, right? Wikipedia has a, it's a bunch of people putting information into the thing, and it's caused trouble for encyclopedia publishers. They're all out of business. There's a lot of power to that, but nevertheless, there is a master copy. There is a person with administrative control saying, this is the version. Other people are writing it, but you have to log in and you have to go through all that stuff. So Wikipedia is not a blockchain, obviously. You know what I mean? There is a master copy and there is administrative control. So as long as there is no administrative control, no central administrator, as long as there are many versions, or hopefully one version, but many people holding this master copy, racing, that's what makes the master copy in a blockchain democracy. The fact that this one version is held by many people, that's what makes it official. Enough people holding the copy makes it the de facto official copy. If there's rules to determine how information is put in that, in my mind, it is a blockchain. I try not to get into too much of the distributed ledger and all that stuff. I don't care. That's for people on Twitter.
Thank you.
Okay, maybe just time for one last question before lunch. I'm conscious we're between you and lunch at the moment, which is a dangerous place to be.
I don't know.
Is it me? Okay.
Yeah,
so,
he was first.
Yeah, okay. Sorry about that. So yeah, thank you very much for really explaining very thoroughly the whole infrastructure and linking it to insurance. You mentioned one exciting real user case, which are the diamonds from the British lady. I forgot the name of the company. We met her in Hong Kong. What other that you've come across that you would kind of see as related as the diamond user case for the insurance company? Have you come across something that is really, really exciting? I think the diamond one is great, by the way.
That's related to that?
No, it could be something else.
Well, I'll give a simple one. And it's not as big of a deal, I think, outside of America, but title insurance for homes. In America, it's by county. So there's a real cost to selling a home, and you kind of have to buy title insurance in case anyone else lays claim to the home. So we're seeing a lot of these registries built, which are not good news for notaries as a profession. Notaries are in, this is the notary here. You know what I mean? This technology. So that's part of it. There's quite a bit out there. I mean, we've got the people doing the marketplaces for underwriting, which I think is a very powerful idea. And we see it with the telematics, especially because IoT has really been, the uptake has been driven by the insurance industry in the cars. And the capacity, look at trade finance, that the movement of goods in a normal company, you've got your supply chain managers here and your trade finance people here. They're not even in the same offices. Goods and money coming together with insurance in the middle of that is happening. That's already happening.
Okay, thank you very much indeed.